So this is Euro Pound analysis for Monday the 16th of October. So let's go to the high time frames first and see how prices have developed. Now, in the month of September, we did see this engulfing candle, a bearish engulfing candle in and around an area where we've had resistance in the past. Now, currently in October, we did see a lot of buying, and prices did retrace upwards quite heavily, and at one point we were expecting a continuation to the upside, but inevitably prices have sold back down as the euro has weakened. The catalyst possibly being Mario Draghi being a lot more dovish than market participants expected, and because market participants were expecting a wind down of QE from the ECB, the European Central Bank. But let's just look at the charts because we trade primarily on what we can see. So overall, we are in a bullish trend, and we've got a trend line there in red, so that's beneath where prices are currently. Let's just have a look. We were cautious because of the bearishness. Now, if you look at these charts here, we seem to have gone into a bit of a range now of 92 to, is that 83? Is it? About 92 or 283. You've got a bit of a range going on there now. So, what have we seen? So, on this weekly chart again, we're in an uptrend. We've got a bit of consolidation, break to the upside to test those levels, and we did sell back down, which suggests that there's a lot of sellers hanging around there, or buyers are taking profit around it, not taking any chances. Now, we've come back down to this trend line here. We have put in, concerningly, this bearish pin bar on the 9th, the candle which opened on the 9th on the weekly time frame. Now, we did, based on where the candle opened, the previous candle closed, we did gap down, went on to retest, went on to new highs, and it sold back down again. So we did see this weakness here. It'll be interesting to see how this candle plays out. Currently this week, whoops, let's get this right. Let's just, not sure what's going on there. This week, so the candle for this week opened at 88.73. Is it? Let's make sure we get this right. 88.73. So let's just get it on the charts. 88.73. When your stylus just takes its time. $88.73. What is that? That's not 80. 88.73. Okay, so on the weekly time frame, again we are in a as you could say, we're in a bullish trend, but concerningly, that's a word. And what's concerning me is this this pretty engulfing candle here. It's a bit of an engulfing candle, and even though it was just a sell down to support the 20 period moving average on the, I think it's a monthly, or weekly time frame. It's one of the high time frames, and we did find some support. We have seen some buying in the market, but the sell-off from last week is concerning. So we're going to pretty much trade off this week's pivot and being flexible in our approach. So if we go down to the time frame below, we've got the daily chart, and on the daily charts, what can we see? So I think I did put a Fibonacci on the I don't really use Fibonacci, but I did put a Fibonacci based on the high up here on the 29th, all the way down to the low over here somewhere on the 28th. And where this candle sold off from at 90.24 was the 50% retracement for Fibonacci. So if I was a Fibonacci trader, I would use it as a very bearish signal to trade the market downwards and project that the market would possibly go on to retest these lows here, or possibly this 200 period moving average, because that was a 50% retracement before a continuation pattern to the downside. Concerning on the daily chart, even though we were in an uptrend, was this retracement is quite heavy all the way down, and the second retracement we can see here did not go back up to retest the highs up at 90. Hold on a second. These retracements didn't go on to test the highs. Instead, it sold off from the 50% mark. Now, we did have this let's get roughly on here. So we did have this what could be termed as a bearish pin bar off an actual area of resistance. When we do see selling off areas of resistance, I suppose we target the areas beneath which are support. Now, so let's have a look at the execution time frame and see where we could sell off possibly to on the euro pound. So we've gapped down, as can be seen on these charts here, and we are seeing some bullish candles. Now, if we were to use this candle over here as our reference, the candle which opened at 5 p.m. on the 17th, and pretty much say unless we trade above its highs at 89.88, overall we should maintain a bearish bias on the market. Now, prices have consolidated on the 200 period moving average on the execution time frame, which is the 200 period moving which is a 60-minute chart, and sold down. We seem to have gapped down, found a bit of support. So what might likely happen is we'll retrace upwards, fill the gap, and turn around to head towards 88.51. We've got this higher time frame moving average here in black, which currently sits at 88.65, about 15 pips above the zone. We are currently at trading 88.88, 88.88 at the moment. So as can be seen on this chart, we've got the AA50, and we've also got this diagonal trend line to see if this and the diagonal trend line is drawn on the monthly chart. So overall, as we have sold back down from 89.83, if we do trade below 88.73, I'm going to be extremely bearish, while being cautious about the high time frame moving average in black on the charts. If we do trade above it, in light of this recent sell-off from 90.24, I would be very cautious, especially in regards to the 200 period moving average and 89.38, which was a pivot from a couple of weeks now. I think it's a couple of weeks. It might be last week. No, it was 89.45. Let's just see something here. It doesn't make sense actually. Hold on a second. I'm just gonna have a look at the charts. I think that level's actually been moved actually. It doesn't seem right. Let's just see where we are. So 89.45. Yep, that's like I knew there's something strange. I don't remember having a level at 38. So that's actually been moved. So if I change, that's the hourly chart. This is actually at 89.45. Let's just get that change. 89.45. So there we are. So 89.45, which is last week's. I've got 200 period moving average above it. So prices do hold this 89.73 and we do have bullish price momentum after we pretty much trade 89. I suppose reasonable to expect price up to 89.45. If we do hold 89.45, might get a bit of consolidation beneath, which if we do break it to the upside, or we just continue the momentum all the way into it and a successful break, a pullback test, we could expect prices to go up to 90.24. But in light of the recent sell-off from that major area of resistance, we could see prices instead go up to 89.45, turn around and head all the way back down to 88.51, and underneath which we'll be looking at the diagonal trend line, the horizontal trend line. If those are successfully navigated, 88.20 should come into focus. I don't expect price to go much below 88.20. Actually, hold on a second. We are 88.91, 70 points on euro dollar in a day. Yep, below 80. Just look at the ATRs. Below 88.20, 87, 83 would be a major level. The major levels are marked out in red on charts. Minor levels, weekly pivots, are marked out in blue. So my overall view for the euro against the pound is I've got a short bias in at the moment. First, I'd like to see our prices trade if it does trade upwards to 89.45. I would want to see our prices react to that level. If prices can react positively and break above it and hold it, my bias would shift to bullish. But if it does not get up all the way up there, or it turns around when it does get up there, then my bearish bias remains intact. So before I go, LCS, like, comment, subscribe. Thanks for watching.